So today's video is, should you buy a property in a limited company or not? Now obviously I have to say this is a disclaimer. I have to legally say that I'm obviously not allowed to provide financial advice or tell you what you should and shouldn't do, especially in relation to put it in a limited company. But what I am going to do is explain the benefits of purchasing in a limited company. And also I feel I'm in a good position to say this because I myself personally have done this and I haven't done this. Does that make sense? Does it?
I promise, like, and even it's been a weird these.
So to clarify, I never used to buy properties in a limited company and now I do. So yeah, I haven't and I have. Anyway, moving on before I completely butcher this video before I even get started. I will be discussing with you whether or not you should be buying property in a limited company and whether or not the benefits of it outweigh the drawbacks. Let's roll that intro please, Aaron. Okay, so in case you didn't know, Section 24 has kicked in. And if you remember back in the summer of, I think 2015, you know, the budget that we all kind of watched, Section 24 was introduced on the 6th of April 2017. And it was basically just to make landlords' life a lot more stressful because that's kind of what the government seems to love doing. Now, Section 24 is basically an amendment to the UK tax law. And in layman terms, it basically means the amount of income tax relief landlords receive for residential property finance costs will be restricted to the basic rate of tax. Now, the changes that were introduced were actually phased in over a 4-year period, which have now fully kicked in. And it was the elimination of tax relief on mortgage interest payments, which took place as the following. So in 2017, landlords were able to offset 75% of their mortgage interest against their rental income. Then in April 2018, it became 50%. April 2019, 25%. And yes, you guessed it, the year that keeps on giving, 2020, in April, it was reduced to 0%. And this was actually replaced by tax credit, I believe, of 20%, which kind of limited the short-term impact. Now, Section 24 applies to the following. So I'll just quickly read the screen. Now, if you're still awake, that basically meant it wasn't financially beneficial for people earning a certain salary to have properties in their personal name. So this is why you've seen a lot of people on the higher tax rate moving them into limited companies, because otherwise they're just literally getting taxed far too much. Now at this point you do need to speak to an accountant to advise whether a limited company is for you. Now buying a property in a limited company may be overwhelming for some of you, but I promise you it's really not that overwhelming, because if an accountant does believe that buying a property in a limited company is going to help your journey better, it's going to be better financially for you in terms of tax and reliefs and stuff, then it's not that bad. And what I'm going to do is just very quickly explain the setup. So initially you set up an SPV. That is a special purpose vehicle in which will be used to buy or trade properties. Now by trade, all I mean is flipping properties. And just make sure, by the way, you know whether you're flipping or you're holding, because the codes are slightly different. The second thing is to set up the limited company, either yourself or through an accountant. And that's just like choosing a name and filling out some pretty basic stuff. But what I did was I got an accountant to do it, because knowing me, I would just mess up that basic stuff. Now at this point, in case you're wondering, well, this limited company, it's brand new, it's got no incomings, it's got no outgoings, no turnover, no profit, nothing. That's okay. Newly formed limited companies are absolutely fine. You see, when you go to a mortgage lender, you'll actually be looked at personally rather than them look at the actual limited company itself. So provided you're not hiding any skeletons in your closet, the process of buying will actually be almost the same. And I say almost because, well, there's a few differences between buying it in your personal name. Now, why I said almost is because limited company purchases, the rates are slightly higher, and the actual mortgage repayments always cost a little bit more. Now, for further information on this, I would recommend you speak to a good broker. I'm not a broker. And just ask them what you'd be expected to pay. But let's speak about the advantages of buying in a limited company. Now, the first is higher tax relief. So we know that from 2017 to 2020, the amount of buy-to-let tax relief an individual landlord could claim, well, it was cut back progressively from a maximum of 45% to 20% for high rate taxpayers. However, that changed limited companies. Therefore, if you're a top rate taxpayer, good on you by the way, the tax payable via a limited company will be lower than tax on individual income. There's also no tax on dividends less than £5,000 for individuals. Now from April 2016, the dividend tax credit was replaced by a new tax-free dividend allowance of £5,000. Now this basically means that you can potentially receive tax-free dividend income from your investment properties. Who doesn't want that, eh? Next up, there's no income tax when you're reinvesting profits to secure further properties. So you can technically grow your buy-to-let portfolio or whatever portfolio that you've got going on very quickly in a limited company if you know what you're doing, because there will be no income tax on the retained profit, thus allowing more cash to be reinvested. Now, although corporation tax, I must say, is still payable on trading profits, so 20% in 2015-16, which I think was reduced to 18% in 2020, this is still lower than the higher rate income tax, which was 40% for 31,786 to 150,000 in 2015-16. God, that was a mouthful. And the best thing is personal funds can be drawn back out of the company. So an investment you make in personally into the limited company would be a director's loan. And this could be for deposits on the house, but they can literally be drawn out. And I've just realized there was another one as well, and I'm going to tell you that now as well. There is a much easier change of ownership. So the company will own the property, i.e. Aaron Limited Company. And the company directors or shareholders can actually be changed pretty easily. You can therefore add or remove owners depending on your actual situation, which is really, really useful in this property game because no days are the same. You never know what's around the corner. So perhaps you want to add a partner in order to receive investment funds from them to maybe expand your portfolio, or you're buying out a previous partner. Changing ownership via limited companies or company's house, well, it's actually a lot easier than changing ownership of a property by sale or in your personal name. So there we have it, a little bit about whether you should buy in a limited company. Now, of course, you need to speak to some specialists, but I just hope for this video you got some insight into some of the legalities and some of the stuff that's actually going on and some of the benefits as well. And having been on both sides, there are definitely pros and cons of both, but I'm always happy to learn more. So if you have anything else to add, please do let me know in the comments below to maybe help the people watching this, because I'm always happy to be proven wrong or learn some more information. And if you found this useful, please do hit thumbs up. Maybe consider subscribing if you find the content useful. I've got other videos not property related which may be of interest, but they just may not. And I look forward to seeing you in the next video. Thanks for watching.